Hello, good morning, and welcome to today's morning report with me, Richard Perry, market analyst at Hantec Markets, for Tuesday, the 18th of February. The main handover that we had overnight was actually one of fairly positive moves. In the Japanese stock market, that followed on from the decision by the Bank of Japan to remain dovish in its monetary policy. The Bank of Japan also opted to continue and extend a special lending program for another year, which would help to support the economy. That comes after the disappointing growth number that we saw on Monday from Japan. So that has certainly boosted the Japanese equities overnight. And to be honest, the risk appetite in Europe has not really followed through from the back of that. It was fairly muted yesterday with the US on holiday, and maybe also down a little bit with FTSE having some significant gains. Actually, was the only real market to make a move yesterday. That's down as well. So maybe in front of in the fact that the US is still to come back and make its move this week. Maybe investors are a little bit tentative in the early hours of trading. You've also got a couple of big numbers for the Eurozone as well today. You've got first of all, you've got UK inflation. That is out at 9:30. The last figure was 2.0, and maybe the worry is that the trend in the last few months has been lower on this inflation figure for the UK, and maybe that is impacting on sentiment this morning, certainly with sterling coming under some early selling pressure as well. And the other figure you've got is at 10 o'clock. You've got the German ZEW economic sentiment. And to be honest, that number has been fairly positive in recent months. So the euro has actually found a bit of support in early hours of trading, and that actually takes us nicely with the two currencies diverging against the dollar. That actually takes us nicely to our chart of the day, which is the euro sterling. Now, this chart has been in a big downtrend channel for a good long while. We continue to sell at the downtrend, and also this 55-day moving average seems to be a fairly good basis of resistance as well. You're back towards the bottom of that trend channel, and as you've actually rallied quite sharply off the low there yesterday. And if you look at the intraday basis, you're actually looking fairly strong, and you're coming up for a test of that 82.27 mark, and if it can break above there, then that would imply a continued rally and a base pattern where you've got this resistance band around 82.80 up towards 83. So that would suggest that there'd be further gains in this recovery. But if you take it back to the daily chart, that 83 mark is pretty much bang on around about where that 55-day moving average is. So I think you can see where possibly we're going with this. You're seeing another bear market rally within this big downtrend channel, and that would ultimately be a chance to sell. But I think near term, I think we're seeing a recovery in this euro sterling chart, and I think it's going to be testing this 82.27 high that we saw on Friday, and if it moves above there, that would complete a small intraday base pattern. So I wish you good luck with your trading on euro sterling, and I will speak to you later.